Hi and welcome back to another earnings report. Let's run a scan on earnings reporting this week, which includes the total option volume indicator, sorted from greatest to least. Let's take a closer look at Oracle Corporation. If we click on the ticker, we see that this large cap company reports earnings on Monday, June 13th, after the close. If we click on the Earnings and Financials tab, we see that the options market expects a move of 7.0% in either direction. This move was breached in 3 out of the last 12 earnings. During that time, the post-earnings move was outside of the implied range 6 times. In those cases, long straddles were profitable. The rest of the earnings moves likely yielded profitable short straddles. We can overlay quarterly financial data by clicking on the ratios below the earn move graph. Let's look at the PE ratio, which is the stock price divided by the trailing 12 months earnings per share. For ORCL, the current PE ratio is 13.7, which is 6.4% over the average for the last 12 earnings observations. Heading back to the Overview tab, we can quickly run a scan to find the best option trades. Since earnings are right around the corner, let's scan for neutral strategies. Let's filter the scan results by S%, or smoothed edge, by setting it between negative and positive 3%. This helps narrow the results to trades that are fairly priced. The highest ranked trade is Iron Condor with strikes at 55, 63, 72, and 80, expiring on the 8th of July 2022, for a credit of $2.47. If we pull up the trade, we can see the theoretical values in more detail. The distribution edge, found by the expected value of the payoff picture on the stock's historical distribution, has an edge of 51.8%. The forecast edge, which is derived from historical volatility, has 28.7% of edge. Lastly, the smoothed edge, which is calculated by drawing a best fit curve through the monthly implied volatilities, has an edge of 2.4%. The edge is relative to the mid-market price of the trade. Greater positive edges are a theoretical benefit to the trader. Let's look at this trade in the Trade Builder. Over the last month, the stock price fell 5.4%, while the 30-day implied volatility rose 23.7%. The average slope of the trendlines is negative. The heat map on the right side of the graph shows green where volatility and slope are undervalued, and red where they are overvalued. In this case, short-term IV and slope are very undervalued, while the long-term is slightly overvalued. We can also see this trade overlaid on the monthly implied volatility graph in the Chain tab. The legs for this trade are circled. For any questions or issues with the video, please contact Otto at ORATS.com. To subscribe to the dashboard, go to ORATS.com and click on the dashboard product page. Thank you for watching. Please like and subscribe to our channel and look out for more videos.